Let's look into the fourth problem of Standard 11 Accounting Equation Concept Samachir textbook. So the first transaction in the fourth problem goes as started business with 1,40,000 of cash and goods worth rupees 60,000. So this sum has cash and stock. With cash and stock they have started business. So first let's record cash and stock. So I've already opened out the format of it, that is cash and stock. So 1,40,000 worth cash and stock worth rupees 60,000. So when you add up this two, that sums up to your capital. So 1,40,000 plus 60,000. So you have a capital of 2 lakh rupees. So the capital is not directly given, but it is given in the form of cash and stock. So next you have to get the equation. So just bring down the values because this is the first equation. We do not have much to do with it. Next transaction is purchased furniture worth rupees 20,000 by cash. So when you are purchasing something, you pay cash. So from the cash column, you are going to subtract 20,000. You do not have anything to do with stock. And you're going to open a new column called furniture because furniture is coming inside. So add furniture 20,000. So you do not have anything to do with capital. So put a 0 for capital. So now it's time for equation. So 1,40,000 minus 20,000 is 1,20,000. 60,000 in the stock column, and we have purchased furniture. So 20,000 in the furniture column, and in the capital column it is the same 2 lakhs. So we must get the same 2 lakhs in my left hand side. So 1,20,000 plus 60 is 1,80,000. 1,80,000 plus 20 is 2 lakhs. Right. So next is going to be depreciation on furniture. So depreciation is the wear and tear of a particular asset. So this decreases the value of the asset. So it is a loss. So indirectly capital is involved in terms of depreciation. And it is on the furniture. So directly furniture is being involved. So this is totally a loss and it decreases both the capital and the furniture account. So depreciation on furniture of 800. So I do not have anything to do with cash, stock. So furniture I must depreciate 800. That is 800 decreased. And in the capital I am going to decrease the 800 because it is a loss for my business. The value of the asset comes down. So it is a loss. The equation what I get is 1,20,000 from cash. Stock is 60,000, furniture 19,200 and capital is 1,99,200. So my equation is also balanced. When I sum up the three from the left hand side, it comes up to 1,99,200. So my next transaction is deposited into the bank. So now I have to open a new column called bank, which I have already done. Right? So deposited into bank. So I'm taking out the cash and I'm going to deposit it into the bank column or the bank account. So I'm depositing 40,000. So subtract 40,000 from the cash column. I'm going to deposit into the bank column. So add 40,000 into the bank column. So other than that, you do not have anything to do with stock or furniture or the capital. So the equation what I get is 80,000 as cash, 60,000 as stock, 19,200 as furniture, 40,000 as bank, and the same 1,99,200 as my capital. So when I add up and see, I get the same 1,99,200 as my balance. The next transaction is paid electricity charges through net banking. So when net banking is involved, I am paying through bank, and this electricity charge is not an asset, but we are going to show that as a expense. So we are going to subtract it from the capital. So I do not have anything to do with cash, stock or furniture. I'm going to subtract this 800 rupees of electricity charges. I'm going to subtract 500 rupees of electricity charges from bank and 500 rupees as an expense from my capital. So the total what I get, the equation is going to be 80,000 as cash, 60,000 as stock, 19,200 as furniture and 39,500 as bank, and my capital will sum up to 1,98,700 after subtracting 500. So when I add up and see my left hand side, it is same as my right hand side. So next I'm moving on to sold goods to Ravi. So we have done a credit sales to Ravi for rupees 10,000 for 15,000. The cost of the good is only 10,000 according to us. But we have sold it for 15,000. So the sale price is 15,000. So from the stock column, I'm going to subtract 10,000 worth goods which I sold it to Ravi. And I'm going to open a new column known as the debtor column because this is a credit transaction. So in the debtors column, I am going to add up the 15,000 which Ravi is supposed to pay me as a trader. Next, the effect which it has on capital is when you take the difference between the two, that is the cost price and the selling price, I gain 5,000 rupees which is going to be added up to my capital. So the profit of 5,000 is added up to my capital. So the other accounts doesn't play any role in it. So I put a 0 for the others, and the equation which I get is 80,000 in cash and 50,000 in stock because I sold away 10,000 stock, and 19,200 as furniture, 39,500 as bank, and 15,000 as my new debtor who I am supposed to receive money from. And with adding up the total of 5,000 profit, I get 2,03,700 as my capital. So when I add up my asset side, that is my left hand side, I get the same as 2,03,700. So now for the last transaction, Ravi is returning goods to us which is costing 5,000 rupees for us. According to him, it is 5,000. So goods returned by Ravi is 7,500 costing 5,000. So I do not have anything to do with cash. So I put a big 0 for cash. Now he is returning back goods worth rupees 5,000. So I add up 5,000 to my stock because stock is coming inside the firm. Next, for the furniture, it is a 0. And the bank also is a 0. Now since he has returned that 5,000 worth goods, Ravi need not pay me 5,000 worth. So I subtract 5,000 from Ravi's account, that is the debtors column. Now this doesn't have any effect on the capital, so capital remains as it is. So now my equation is 80,000 in cash, 55,000 in stock, 19,200 in furniture, 39,500 in bank, and 10,000 in debtor. So I get the same 2,03,700 as my capital. So when I add up my asset side, I get the same 2,03,700 for my asset, which is same as my capital side, 2,03,700.